Good afternoon, everybody. It's Doc here from OnTheMoneyOptions.com. It's Monday, March 4th, and the U.S. stock market today was about as unpredictable and maybe unsettling as the weather on the East Coast. We're going to start out by looking at the 5-minute chart of the SPY, and you'll notice that pre-market, the market was up considerably, and at about 10 o'clock it moved down and went down strong until midday. Two things I want to point out to you. First of all, you'll notice at the end of the session there are several positive volume bars. The other thing is that today's volume was only 105 million on 110 million average, so I wouldn't put a lot of stock in what happened today. Moving on to the technicals, the first thing I want to show you, and hadn't brought this up in a while, this is the stocks trading above their 200-day moving average, and as you can see, we dropped really low during the Christmas drop, and then we've moved back into this channel area, which looks like a more reasonable area that we can operate in. So the market has sort of recovered from the December lows and is beginning to move in a more normal range. Now, looking at some of our technical analysis, this is the bullish percent indicator for the New York Stock Exchange. We added another X today. We are now above the bearish resistance line, and we're at about 62% of stocks on the New York Stock Exchange that are on point and figure buy signals. So again, this is a more normal area, and it seems like we're back to a more comfortable level of operation in the market. This is the New York Stock Exchange Advanced Decline line. Now, this is a weekly number, and it will start off and accumulate from today through the end of the week. And as you can see today, the issues were 646 more down than up. So we've started off down a little bit low, and we'll watch this carefully over the week. This really has the most significance at the end of the week. This is the SPY Relative Strength Index. The RSI at the top of the chart has not gone above 60. Again, this is bothersome to me. I want to see it move and stay above 60, and it just seems to not want to go up there. So that is a little bit of a sign of caution. I'd be careful at this point and just watch this to see that it moves, that we move back above the 60 level and stay there. This is the SPY rate of change, and I'm going to say this every week that it's still below zero. I'm concerned. I'm not comfortable until I see the rate of change back in positive territory. It keeps trying to get up there. It inched up a little bit today, so I think we're headed in the right direction. The next chart that we look at is one of our risk measures. We're looking at the small caps, the RUT, and we're looking at it relative to the large cap index. And as you can see, it moved down a little bit today, and it's a little bit too early in the week, I think, to wonder what's going on. But at this point in time, you can see that there were fewer small caps that were participating today than in the large cap index. This is the equal weight index relative to the S&P cap weighted index. A good measure, again, of participation in the market. And this looks to me like it's holding up in this area in higher highs. So there's a fairly broad participation in the market, and I think we're still okay at this point in time. This is the VIX. The VIX was very active today. It popped up above 17 for a little bit and then dropped back down and settled again under 15 at the end of the day. So we're still in the low end of the range on the VIX, and that suggests to me that there's not a whole lot of concern about the market taking off and going down and running away from us at this point in time. Of course, it's like the weather. Anything can change. The last chart that I want to look at is the TNX. This is the 10-year Treasury yield. It's currently running at about 27.5, which basically means that the 10-year is trading about 2.75%. When you get concerned about the market going down, this will blow up, as you can see here in the November-December time frame, which it did not do. So again, that's another indication that the market's just sort of working out some issues and trying to settle down. So anyway, if you like this video, give me a thumbs up, subscribe to my channel, and as always, trade smart and stay hedged. I'll see you later.